What if I told you that the most powerful force in the modern economy, the stock market, was born not in a skyscraper, but in a coffee house? It started with a simple revolutionary idea that ordinary people could own a tiny piece of the world's greatest adventures. This is the epic story of how sharing risk and reward built the modern world, from sailing ships to silicon chips. Our story begins in the 1600s with the world's first true corporation, the Dutch East India Company, or VOC. Sending a ship to Asia was incredibly risky. A single voyage could take 2 years, facing storms, disease, and pirates. One disaster could bankrupt a wealthy merchant. Their brilliant solution? Sell shares, or acties, in the entire company, not just one voyage. This created a permanent joint stock company. If multiple ships returned with spices like nutmeg and pepper, all shareholders split the massive profits. This revolutionary idea of shared risk and permanent capital turned Amsterdam into the world's first financial capital. But shares are useless if you can't sell them. This new invention needed a marketplace, and it found one in a most unlikely place: London's crowded coffee houses. These were the social media and news hubs of their day. In establishments like Jonathan's, traders gathered to buy and sell shares in new ventures, from maritime insurance at Lloyd's to ambitious trading companies. They created the first stock lists and invented the terms jobber for a stock dealer and broker for a middleman. This informal, caffeinated gathering was the direct ancestor of the London Stock Exchange. As the center of financial innovation crossed the Atlantic, the market found its iconic home, Wall Street. In 1792, 24 traders signed the Buttonwood Agreement under a tree, pledging to trade only with each other and set fixed commission rates. This was the humble birth of the New York Stock and Exchange Board. The 19th century's Industrial Revolution saw the rise of railroads, steel, and oil. These companies needed massive capital, and everyone wanted a piece of the action. The trading floor became a chaotic, thrilling arena where fortunes were made in minutes, and the invention of the stock ticker in 1867 created a constant, flowing river of financial information. But this new power came with immense peril. The Roaring Twenties led to a speculative frenzy, with everyone from tycoons to chauffeurs buying stocks on margin with borrowed money. The crash of 1929 was catastrophic, revealing the market's destructive power and triggering the Great Depression. This disaster led to a new era of crucial government regulation, including the creation of the Securities and Exchange Commission, SEC, to protect investors and ensure transparency. For the first time, the rules of the game were being formally written. Then came the digital revolution. In 1971, the NASDAQ exchange was born, the world's first electronic stock market with no physical trading floor. The 1980s and 90s saw the rise of personal computers and the internet, which democratized investing. Suddenly, anyone with an online brokerage account could trade stocks from their living room. The market became faster, more global, and more accessible than ever before. The cry of the trading pit was replaced by the silent, lightning-fast hum of server farms. Today, the stock market is deeply woven into the fabric of our lives, often in ways we don't realize. Through pension funds, index funds, and retirement accounts like the 401k, millions of ordinary people are now part owners of the world's biggest companies. When you invest, you're not just betting on a stock price. You're providing capital that funds innovation in AI, clean energy, and medical research. The market has evolved from financing spice voyages to funding the future of humanity itself. So, from a handwritten share in a Dutch spice voyage to a tap on your phone screen, the stock market's journey is the story of human ambition, ingenuity, and our capacity to cooperate on a massive scale. It's a system built on a powerful, enduring truth that by sharing both the risks and the rewards, we can pool our resources to build, innovate, and progress in ways that would be impossible alone. It's not just about money, it's the engine of human collaboration.